Right then, good morning everyone as we head into European trade on Tuesday the 2nd of July. So I was going to say June, we're back to July now. Uh, these kind of couple of articles across here, I mean, there's not that much kind of fresh information to go through other than what we went through on yesterday's video, but a couple of main things that aren't like really here. I mean, you can look at financials lift Japanese shares on rate hike speculation, US yields, which I'll talk about in a minute, which is an interesting move that I think we need to keep an eye on. But kind of two main bits of information overnight come from, I would say, Australia. I would say it's probably slightly opposite, kind of more hawkish RBA minutes. Maybe it didn't surprise to the top side, but I'll talk about the minutes now in a minute. And then the euro as well. I think stock index has been down slightly. They're just up and then down and then up and then down. So I think there's too much we really can read into that. The US dollar strength over the last kind of 24 hours is something that I'm going to speak about, and that is a little bit unexplainable, but you can look at yields, but we'll come back to that in a minute when we look at some charts. Now, you've had Christine Lagarde speak at dinner yesterday at the ECB's forum, essentially ruling out July for an interest rate cut. Sort of Philip Lane then this morning talking again himself, saying that July cut is pretty much off the table. So no interest rate cut from the ECB at their next meeting. Incoming economic data that need to be watched, but not enough progress for a fresh interest rate cut. Now, we do get inflation out of the Eurozone today. Maybe they know something we don't when it comes to these inflation figures, so maybe these inflation figures do not suggest we get another cut. But in fact, they've already cut once. Inflation's kind of back in the mid-range of 2%. On the core reading, it's the upper band of the 3%, so probably not enough progress to really go into a cutting cycle or to cut multiple times, which is completely understandable. We do get Christine Lagarde and Jerome Powell speaking at 2:30 today, which we'll keep an eye on. At 2:30, a bit of an open panel discussion, which may spark some volatility or may not. Right, so that will continue today. That will continue tomorrow, and that will be it come the end of Wednesday afternoon. But apart from that, you got some minutes out of the RBA overnight. Now, a lot of it was largely kind of expected, but they did make a comment in it. So, a material rise in inflation expectations could require significantly higher interest rates, right? I think significantly higher is an interesting thing, right? And they're only looking at inflation expectations. They're not even looking at inflation expectations. So, now there's a few different ways you can get that. You can get that up. You can get on a few of the different news sources and charting softwares and stuff, but I'll fire that up another time. But if inflation expectations move higher, significantly higher interest rates, that's certainly an interesting one. Not sure why Aussie's kind of down. I mean, they did know the kind of softening in growth and stuff, which means they won't want to hike interest rates into softening growth. But kind of, to me personally, the fact that they're mentioning could require significantly higher rates isn't really a situation where I think the Australian dollar should be down across the board like it is here. You think it should be a little bit higher than that, but anyway, it's obviously got some downside in stocks to contend with as well. So if stocks are a little bit down, Aussie and Kiwi can be a little bit down as well. But for me personally, I mean, the fact that the Aussie is up against the Kiwi gives me a little bit of hope for that one. But I think Australian dollar, something worth keeping an eye on going forward, and especially in inflation expectations globally as well as, or in Australia as well as globally, should I say. Apart from that, that's kind of what we got to talk about. I mean, like, it's upside in the US dollar. You can see your Aussie, your Kiwi, Euro, Sterling, dollar Swiss, dollar CAD, dollar Yen, all pushing higher yesterday. Obviously, that then naturally drags the dollar index with it. But you can see this move, across yields yesterday, kind of over the course of Friday, and then into Monday. You got this manufacturing PMI, which was lower than anticipated yesterday. Right, lower than previous, also lower than consensus. Then you look here, and yields of popped higher. 10-year pops higher, 2-year pops higher. Causes some upside in the dollar and downside in stocks. I can understand that causing some upside in the dollar and downside in the stocks, because maybe a bit of safe haven. It's not how it's worked over the last number of months, but it could be a bit of kind of safe haven appeal. But ultimately yield should go the other way in that situation. But anyways, big upside in the 10-year, solid upside in the 2-year, has dragged the US dollar with it over the last kind of 24, 48 hours of trade. So what to make of that? I mean, I don't think there's a clear reason. So if there is a clear reason, I haven't come across it. Could be a bit of position squaring heading into the shortened week this week. It is a pretty much Monday, Tuesday, Wednesday week in the US. I mean, you got Independence Day on Thursday, plus then Friday. You'd have to imagine a lot of people will take Friday off. You've obviously got NFP on Friday, which probably will get in the way of some people's holidays, but I think others will probably just say, nah, I'll take this one off. They say NFP every single month. They say NFP is the most eagerly anticipated labour market figures in history, but half the time they don't end up producing any sort of volatility. So not gonna buy that again. But yeah, I guess we'll have to. We'll keep an eye on obviously as it comes around to Thursday. But yields higher, dollar higher. Stocks bit all over the place. Down yesterday's session. What to make of that? I'm not entirely sure. It doesn't really make too much sense from a calendar point of view. But again, that's the joys of technicals. You can't really. You can't disagree with them. I mean, we can dispute their predictive value, but once things happen and markets move, you can't dispute that the market has gone up. You can't dispute that the market has gone down. That's what the charts are there for, to tell you. So, I mean, yields higher, dollar higher, stocks a bit lower in yesterday's session. That makes complete sense, but the reasons behind it, I'm not so sure I really have figured that one out yet. But anyways, sometimes you don't need to in financial markets. But anyways, I think Australian dollar, one to keep an eye on. Inflation expectations going forward. The ECB not looking to cut interest rates in July. That's confirmed by two members, Philip Lane and Christine Lagarde. Plus yields popping higher in yesterday's session. Is that set to continue? Definitely is a driver of currency valuation. So we will definitely keep an eye on it. Whether that continues or not, we'll have to see. But not a great deal of fresh information out apart from that. Shortened week in the US. And you'd have to imagine things wind down pretty early in tomorrow's session. But we'll cover that when we get to it. For now, dollar upside, yield upside, that's probably what you got to keep an eye on, isn't it?